Hey there, Matt the Mortgage Guy here, recording a quick video where I'm going to give you my prediction for what's going to happen with mortgage interest rates in 2021. Now, before I get into it, if you're new to the channel, if you like mortgage, real estate investing, a little bit of personal finance, I put out 3 videos a week, super straightforward and honest information that's easy to digest. So if that's your cup of tea, please consider subscribing. So before I get into it, smash the like button or just gently press it if you want to. It helps the YouTube algorithm. More people get to see this. This good, honest advice really helps the universe. So you're really doing your part if you press that like button. So thanks for that. Without further ado, as an independent mortgage broker, a lot of my job revolves around fielding questions about interest rate. And I don't know if we're gonna buy now because of this or because of that. What do you think is gonna happen with interest rates? What do you think is gonna happen next week, next month, next year? And I'm gonna be pretty short and sweet in this video because I don't wanna just drag this thing on what I think is gonna happen with interest rates and a few reasons why I think that. Now, 2020 has seen historic low interest rates. It's actually hit a historic low, it's bounced around a little bit, and then a new historic low, bounced around a little bit. All of 2020, it has been fairly flat, but historically low. And so people are wondering what's gonna happen next year. And some people honestly call me and they're thinking about getting pre-approved, they're thinking about buying a house. They're afraid, I wanna buy a house before rates go up. And I'll tell you, like I've told hundreds of people on phone consults, I don't think the interest rates are going to go up. And when I say not go up, they're not gonna go up dramatically in the next 12 to 18 months. I just don't see it. There's so much outside influence. You know, the Fed has got different tools they can use to artificially keep interest rates low. They're gonna continue to do that because it's good for the economy. And I don't see them changing policy or changing course on what they've done. You know, buying mortgage-backed securities to push interest rates low. That's something that they've just continued to do. And I see it happening in the future, kind of irregardless of what happens with other parts of the economy. Another reason why I'm gonna call in this video, it'll be fun to look back on, me just predicting it, and I'm either look like an idiot or I look like a genius, one of the two. But I also think that I've watched interest rates, and being as low as they are, every single lender, as a broker, I've got 60 different lenders I can broker loans to, they've had to throttle back how low they've set interest rates because they just can't handle more volume. There is some stat out there that 2020, as you might predict, is going to see more mortgage volume than we've ever seen in the history of mortgage loans. And that means that every single lender is at max capacity, or 150% of max capacity, or 200% of max capacity. And you'll see it in increased turn times and just things getting missed. I mean, lenders are just overwhelmed with how much business they have. So imagine if you're a lender and you've got enough room in your margin, I can lower rates a little bit more and I'll still collect a healthy margin. I'll still make a lot of money on this loan. Well, if by lowering it this little bit means you're gonna get another 1,000 loans or 2,000 loans that month, depending on how big of a lender you are, you're not gonna do it if it's gonna overwhelm your systems, overwhelm your people, cause you to take 10 days to underwrite a loan when you're trying to underwrite a loan in 1 or 2 days like most lenders are. Because of this, lenders have had to just stop themselves from pushing rates too low. So as these lenders hire people, some of the biggest lenders in the country are hiring 800, 1,000 people per month. United Wholesale Mortgage out in Michigan is one of these companies that is growing leaps and bounds, is processing some ungodly amount, like 90,000 to 100,000 loans a month. As they hire and hire and hire to be able to meet the demand of the market and how much loans are trying to get done, my theory and my prediction is that into next year, once they've got 10,000 employees to handle volume, they'll look at it and go, you know what? Things have slowed down a little bit. A lot of people have already got their refinances through. we've got this big margin. Let's push rates down a little bit because we have the ability to take on more business. When they do that and any big lender starts a trend, the other lenders look, why are we losing business? Why does UWM have all the business? Oh, because they lowered their rates a little bit. Let's lower our rates a little bit. And lenders do that. It's a open market, and that's what happens. You know, one of the players in the game lowers rates, the other ones do it to follow, and they kind of follow suit. That is going to be, in my opinion, what allows interest rates to go even lower than they are now. So this is my prediction. In 2021, rates will be even lower than they are now. Now, I can't quote rates, it's just not legal. We already know rates are sub 3%. And when I say rates will be lower, I don't mean a 30-year fixed is gonna be 1.75%. I don't see that. But if they're mid to high twos right now, I would not be surprised if we saw low to mid twos on a 30-year fixed in 2021. And if we do see that, we all know that there's going to be trillions of dollars in mortgages that is going to be beneficial for people to refinance. And another thing, which I'll go into more depth on another video, when rates are as low as they are, you can look back historically and adjust for inflation and say, homes are more affordable. They're more expensive than they've ever been, but they're more affordable. And when I'm setting up these scenarios for folks who are buying in Northern California where I live, and they're leaving a place where they pay $2,400 in rent, and then we show them what a 5% down, 30-year fixed, sub 3% interest rate looks like. Wow, that's more affordable than my rent. So that's something that it doesn't get talked about enough, but affordability, we're nowhere near the ceiling. We're more affordable than we have been in the past. Just because everything's more expensive and people are like, oh my gosh, every house is getting 10 to 12 offers, I can't get anything accepted. Affordability is not out of control like some people think it is. So I'll wrap the video up, but just to go on record and say that I think that rates will continue to stay low. And if I had to bet between going up and going down, I'm gonna say go down a little bit. And I'll just say 2.55% on a 30-year fixed will be the rate in 2021. This is a guess, this is a prediction, this is a hope, this is a dream. I mean, I'm on the consumer side. I want them to save money on their refinances. I want them to get a smoking rate so they can go out and buy real estate and watch it appreciate, pay it down at a faster rate and less interest is going to the bank. I'm on the side of the people, so that's what I'm rooting for. And maybe by putting it out into existence, I might help it come to fruition. So that's that. Thanks for watching. If you made it this far, I appreciate you. Consider subscribing to the channel. And if you're in California, I'm happy to help you. Matt, M-A-T-T, at mattthemortgageguy.com. Shoot me an email. If you're outside of California and you want advice or you want a referral to a broker, I'm happy to help you. And trust, I chat with folks via email, via text, all day, every day, from all parts of the country. If you're in Ohio, I'm happy to help you. If you're in Florida, I'm happy to help you. If that's advice in states I can't lend, or if you want to get hooked up with a broker in that state, I'm happy to help. So again, thanks for watching. Until next time.